Hello, I'm Donald McIntyre, founder of Etherplan, and in this video I'm going to respond to Charles Hoskinson video that he posted today responding uh, uh, me and others about the Treasury and clarifying his position about the Treasury. I'm going to show by playing his video and responding segment by segment, I'm going to show one that he didn't respond to the objections and the arguments of our side, the ones who are against the Treasury. He did not respond, for example, to the high level of the minor tax that we criticize. It's 20%, that it should be lower. He did not respond to the excessive amount of money that we have calculated, which is objective. No, there's going to be between 50 and 100 million dollars going to the Treasury, and that from that Treasury to IOHK if the market prices of today between 50 and 60 stay, and if it goes higher it would be many more hundreds of millions of dollars per year, or even billions of dollars when a developer team only needs $3 million a year. The other one is he did not respond to the time limit. We are saying that if a Treasury were to be implemented, that it needs to have a time limit, because if the Treasury is centralizing, then at least we know that at some point in the future it's going to end and ETC is going to become trust minimized and decentralized again. The other thing is, well, he has many false claims and some contradictions. For example, he says that ETC will not die, and then he says that ETC will die. I'm going to point out everything in the video. The other things that he does is he creates a lot of fear. So the strategy is if ETC doesn't get the Treasury, then the price will crash. So of course, all of us who have little portions of small portions of ETC will feel scared and support the Treasury if we were to believe that. But it's not true. Also, he tries to say that if the Treasury does not go through, then ETC will die. He says that if the Treasury doesn't exist and there is a bug in the future, because according to him, there are not going to be any developers, nobody's going to fix the bug, and ETC will crash and everybody will go away. Or that nobody will adopt ETC if that supposed hypothetical threat is there, which is also false. And he's also said that if the Treasury doesn't exist, then there's no innovation, which is also false. But so that was just an introduction. I'm going to play his video and I'm going to interrupt and comment in each point.
Is in broadcasting live from warm, sunny Colorado. Always warm, always sunny, sometimes Colorado. So today is August 7th, 2021. And while most work that we do at IO Global, about 50% or more, is in the Cardano sphere, people tend to forget that we work on many different pieces of infrastructure, products, and services. And one of the pieces of infrastructure that we work on is Ethereum Classic. And we've actually worked on it twice. So a history lesson. Back in the day, and I'm getting so old in this space, I can't remember, it was 2016 or 2017. I think it was 2016. There was the DAO hack, and shortly thereafter, people started making decisions whether they were neutral, they supported the fork, or were against the fork. And so as one of the Ethereum founders, I waited a bit to see what all the other Ethereum founders said. And when it became clear that the majority of them were going to support the fork, I felt it was problematic.
He said here that this is grape juice, corn grape juice, Welch's. One of the things that he said here is that as the founder of one of the founders of Ethereum, he's not one of the founders of Ethereum, technically. The only founder of Ethereum is Vitalik Buterin. He's the one that had the idea of how to solve smart contracts, the halting problem, the gas system, using the gas system, and adding smart contracts in a blockchain using a specific programming language, and with the idea of the state machine, by himself. Vitalik did that by himself, and he wrote a white paper. And that white paper is the foundation of Ethereum, and Vitalik is the only founder. You could say that they're co-founders when you say that Gavin Wood, for example, who is a very advanced computer scientist, he turned the white paper into a technical specification, and that's called a yellow paper. So you could say that he could claim that he's a co-founder because he did a key point of the genesis or creation of Ethereum. And then you could also say that the developers that built the first client are co-founders because they got the white paper, the yellow paper, and they turned it into reality, which was a very difficult thing to do. But all other people who invested or worked or were helping in operational stuff or management or administrative stuff, yes, you could call them co-founders, but those guys are the typical in startups in Silicon Valley. You have the founder and the co-founders, and sometimes they say the first employees are co-founders, but technically the founder is Vitalik Buterin. So Charles was in the founding team, in the original team in the startup, in a management capacity, and he was organizing the legal structure and organizing the developer teams and what was going to be the revenue model. He had the idea of a corporation where the devs would have shares, etc. Or the financing model, maybe it's a better term. So that is a tertiary or fourth level, in my opinion, level of founding. So he's not like it was him and Vitalik who invented everything or something like that. And he was fired also.
Because the people who invested in Ethereum, who participated in the initial ICO, there wasn't a strong social contract there. And some invested with a code is law mentality. Gavin Wood created a term called illegality, and there were dozens of other people that believed in this code that can't lie, can't fail philosophy. And Stefan Tuwal had done marketing and got the Ethereum Foundation to push this concept of the world computer. And these seemed to be the same until the DAO hack occurred, and then it actually turned out that they were different. So the Code is Law group said, wow, that DAO thing is quite unfortunate. It's a shame some people lost their money. We'll just have to move on. Oh, well, it's like Mt. Gox. It's an event. Nothing needs to be done. And the world computer people said, well, the existential problem of having an event like this occur will damage the credibility of the platform to an extent that we may lose our ability to continue building this smart contract ecosystem. So we should bail them out. And I'm paraphrasing both. There's a lot more nuances in this case. Well, because only one side got represented with all the capital, I thought it would be prudent to support the other side so that that side got some love. And that at the very least, the people who invested, they'd have both options apparent ready. So I put my money where my mouth was. I hired a whole team of Scala developers. We wrote the very first Scala version of an Ethereum client. It was a full node, run the Ethereum code. It at one point could connect to the Ethereum network and the Ethereum Classic network. We funded Let's Talk ETC with Christian Severino and Carlos Vicari. We funded some community management, and we attended all the conferences. And we were in the ETC world for almost 2 years.
All this part is true, but it's not that ETC was founded or saved by Charles alone. The ETC, when the split occurred, I was even there, and I was one of the main debaters against the hard fork, debating with Vitalik. Even Bob Somerville was at the time, and Vladimir Zamfir, etc. But I did not go with the ETC chain at that time. I stayed with the fork Ethereum, continuing to fight against other things like proof of stake, etc. And I came back in 2018. But the people that did go with ETC were Charles, Elaine O, Igor Artamanov, Arvico, Cody Burns. Some were coding, others were writing articles and convincing exchanges to list ETC. And Barry Silbert, for example, was a key figure also because he started buying millions of ETC at the time. It was only 50 cents or 60 cents or $1 in that range he was buying. So there were many people there. It is true that Charles was one of the leading figures in the community. I remember going back and forth to the community, and I even had a fight with Charles at the time. Very similar of today, where I criticize his participation, his ideas, and other things. So it was many people. It is not known why he decided to create a node in Scala when ETC already had a Go Ethereum or classic Geth, it was called at the time, written in Go. Everybody used that one, and the parity team also had adapted the parity node that was running on Ethereum also for ETC. So building this third client, evidently proven by history, and in a language like Scala, with a new interface, etc., where people were not used to it, infrastructure people in exchanges, mining pools, etc., was a very risky bet, and he knew it was a very risky bet. And like he said, in this first period, he invested millions of dollars. It's true, he supported Kevin Lord to be the community person of ETC, and he supported that podcast, the ETC, well, he just mentioned it, with Mr. Severino. He was there, and he was there for several years. So all that is true. And this is very important because we have to remember that Charles, in this period, invested his own money, millions of dollars, in ETC by his own will. And this is important for the rest of the video.
We also brought in Grigori Roshu at that time, and we were the first firm to finance the formalization of the Ethereum virtual machine with K. The problem is that both Vitalik and me are the first to admit, as is Gavin, as is everybody else who works in Ethereum in a technical capacity, that the original design of Ethereum is unstable. It's too complicated for what it wants to do, but not complicated enough to actually do what it needs to do. So basically, the issue is that if it's left to its own devices, the system basically becomes untenable with adoption. And that's what you're seeing right now with ETH1. That's why ETH2 exists, and that's why there's a very aggressive technological movement to migrate from ETH1 to ETH2. And if that migration is successful, then they've moved much closer to that long-term dream of world computer. And they're utilizing fundamentally different technology.
What he's mentioning here is that the original Ethereum design, first it wasn't complete, and that's why there were many forks to correct many things and to take out opcodes from the EVM and to add new opcodes to the EVM and rebalance the gas, the gas per opcode. The quantities of gas per opcode and stuff like that. Those are normal digamos, upgrades that you can go doing in a system. The problem that he's referring to, the main problem when he said with adoption, it's not tenable with adoption, is that a fully this happens with Bitcoin, this happens with ETC, and it happens with Ethereum 1. Because ETC and Ethereum 1 are identical in practice. The problem is that they have a limited capacity of transactional capacity. No, Ethereum has peaked at 1.5 million transactions per day. That's how it's floating lately. 1.2, 1.5 million transactions per day. ETC is doing 65,000 transactions per day, which is very good, but I calculate that with the current design, because it has a limit of 8 million gas, I think Ethereum went to 12 million gas of gas limit per block. ETC I calculate with a normal gas cost, average gas cost of around 70,000 gas per transaction on average, that ETC may have a throughput of 680,000 transactions per day. And we know that Ethereum goes up to 1.5 million at least, because that's what it's proven with the gas limit of 12 million per block. That is it, and that is because proof of work Nakamoto consensus blockchains seek to replicate all the data and all the transactions and all the blocks in 100% of the nodes. So for that propagation to exist in all the nodes, it creates bloat on one side, and also the speed of propagation is a problem, especially in areas that have lower bandwidth, etc. So you need to keep the blocks small, sufficiently large to have some, digamos, a normal amount of transactions, but sufficiently small for the data to be able to propagate to all the nodes. This ideal of full replication in all the nodes of the network is precisely Nakamoto consensus, and is the first, even first than proof of work, the first security measure of the proof of work blockchains. Because if you have the database with the property, accounts, balances, smart contracts, dApps, etc., replicated in more nodes, in more countries, in more jurisdictions, regardless of their bandwidth, in the North Pole, Southern Pole, with low bandwidth, high bandwidth, it has to be replicated everywhere, because that's the security model. Because if it's banned in one country, like in China, all the other countries can continue. If it's banned in Europe and North America, then Argentina can continue. If it's banned in Argentina and South America, then at least in Africa they can continue. Even if it's banned in Africa, at least some guys in Africa can, like hidden, continue operating the nodes. But that's only possible, this concept that it has to keep on working even if there's a nuclear war. And even in Bitcoin they put some nodes in space to have this redundancy. This redundancy is exactly the security model. And what he's mentioning that Ethereum 2 is doing, that the proof of stake blockchains are doing, like Cardano, is sharding, which is to fragment the blockchain so that some nodes work on some parts, other nodes work on other parts, and they can increase throughput, which is, throughput means more transactions per second or transactions per day. So they can have millions or billions of transactions per second or day, and they can support high volume dApps, etc. Well, that's layer 2. The base layer is perfectly fine, and the design is perfectly fine. You can continue fixing the EVM, the opcodes, working on reducing bloat and stuff like that. But there's no real problem of design in ETC nor in Ethereum 1. All the fiat dudes like him are saying is that it has a problem because it doesn't scale above, say, 680,000 transactions per day. That's a problem. No, that's not a problem. The base layer doesn't work like that. The base layer is going to have less transactions, but with higher value each transaction for settlements. And all the high volume is going to occur in higher layers. Layer 2, layer 3, layer 4, like I have explained in many other places. And an example of that is the Lightning Network on Bitcoin. Or an example could be Cardano on ETC. Cardano could be the high volume layer, and ETC the low volume layer but higher value and for settlements. And it could be also with Ethereum 2 on top of ETC.
Proof of stake and sharding and all kinds of weird layer 2 stuff like optimistic rollups and so forth, and an attempt to accomplish that end. The issue is that the philosophy of code is law. First, it's not explicit. There was no Thomas Aquinas or St. Augustine of that church to write down the doctrine of that philosophy, but of what is codified in the law.
This is false. In the first few weeks of the existence of ETC as the mainnet, as the original chain, an independent chain after Ethereum forked, precisely what some of the other people, like Arvico, they wrote the principles of ETC and what code is law, what code is law means. There's an article that Arvico wrote that is called the meaning of code is law, or what does code is law mean in ETC. You can Google it. And a document called Ethereum Classic Declaration of Independence also explains what code is law, and it explains all the principles of ETC. Not only that, but other people, including me, have been writing for years, including up to today, articles explaining and re-explaining principles, what is code is law, what is immutability, the meaning of immutability, the meaning of trust minimization, why all these technological innovations like proof of work are so fundamental for humanity, how basic rights are represented in ETC, and that's why code is law is so important, because it protects these basic rights. No, if someone in India, in China, in Argentina, in the North Pole, in the Southern Pole, etc., depends on Charles Hoskinson, or Barry Silbert, or a Treasury, or Vitalik and the foundation for their money, property, and agreements and basic rights to be protected, then it would not be trust minimized. The idea is to protect code is law at the social layer until the network becomes sufficiently big that it would become technically and physically impossible to change smart contracts and accounts and balances and agreements and dApps, etc. Even if we all agree, it would be impossible, because there's always going to be some nodes, some miners not agreeing and protecting that, and not reaching rough consensus. And even if governments pressure and try to change Bitcoin or ETC, Bitcoin for me is already immutable. ETC has to grow even more to reach that point. So this concept that the philosophy doesn't exist is completely false.
Or of ETC, it's difficult to establish how the roadmap of Ethereum 2 is compatible with the vision that ETC has now in that illegality, that code is law world. So at some point, likely in the next 12 to 24 months, the innovations and advancements of Ethereum 2 will not be compatible or downstream or upstream of Ethereum Classic. So they can't copy paste anymore. So that means that ETC is losing its innovation budget. Second, ETC is not.
This is false, because it is true that ETC has been a downstream of Ethereum, and anything that Ethereum did eventually got integrated into ETC. That was Atlantis, Hard Fork, Agartha, Phoenix, Thanos, Magneto, and others. But that doesn't mean that ETC loses everything. For example, Ethereum 2 and many other proof of work chains and EVM compatible chains are practically the same, and they're going to continue to be the same. There's a general standard above all these blockchains, which is what I call the EVM standard, which is the Ethereum virtual machine standard, and everybody's going to follow that standard. Whichever chain digresses from that is going to be less used, because everybody's going to learn, all the engineers, all the developers, users, everybody's going to learn how to use the EVM standard, just like it's Windows or Mac iOS, or Android or iOS in the Mac OS and iOS in the iPhone. All those standards, once they're established, you cannot start innovating and creating new standards and building in Scala and a new node, because you're never going to be successful. Once you have standards established, the rest of the world continues building and continues on from there. And the EVM standard is going to continue. ETC is one of the EVM standard blockchains, and whichever other blockchain innovates and they create something good that is also good for Ethereum Classic is going to be trivial. Not totally trivial, but it's going to be an innovation that ETC is going to be able to import into ETC. A real life example is that Zcash, that is not even a smart contract and it's not even an EVM blockchain. It's a proof of work, a blockchain just like Bitcoin, but with the innovation of privacy, created for privacy, something called ZK Snarks, and that technology was imported into Ethereum, and then it was imported into Ethereum Classic. So it is false that there's not going to be the ability of inheriting innovation from other places.
Unlike Bitcoin, where it can revel in its simplicity and stay the same way and do the same thing for 25 years, 30 years, and just absorb some niche for that. The design of Ethereum is not fit for purpose in the code is law sense. So it's in an unstable place, and it's losing its innovation funding source in both science and code to be able to continue getting better. So what does this mean? It means...
Well, this is false. Ethereum Classic is perfectly fine where it is. It is a fully programmable blockchain. Everything that was built on top of Ethereum today, like Uniswap and all the Yearn, Finance, and all the complex dApps and NFTs, it can be built today on Ethereum Classic. That's how versatile Ethereum Classic is. Why? Because it is identical as Ethereum. So Ethereum Classic, it is in a very stable place now, even if it doesn't innovate anything, which is not my opinion, but if it doesn't innovate in the future, it's already a world computer in that sense. But it's a base layer world computer. So from simple contracts to complex agreements between governments and corporations and their value chain, or corporations and their customers, people and other people from India, people from Indiana, people from Brazil to people from Albania, they can do business on ETC, they can do smart contracts. It's perfectly versatile, and it's false that it's in a state that nobody can use. The truth is that the one that is in a state that nobody can use is Cardano. Cardano doesn't even have smart contracts yet. So I don't know why he keeps saying that ETC is this thing that nobody will use, it's this thing that is crippled, when it is the most advanced technology in smart contracts ever to exist. Why? Because Ethereum is the most advanced smart contract platform ever to exist, and ETC is identical. Not only that, now in the past week, we started the discussions for Mystique to integrate the London hard fork that just happened 4 days ago in Ethereum. And we're not, ETC is not going to change the fee, and it's not going to burn ETC, and it's not going, because the supply is immutable, the supply policy, the monetary policy. And ETC is not going to delay the time bomb, because ETC eliminated the time bomb when it decided to be independent in 2017. So we are only going to import other things that are necessary to keep this compatibility with the general standard, which is the EVM standard, not even Ethereum. We have to keep up with the EVM standard, which is a higher standard even than Ethereum. And that all chains, including Cardano, Polkadot, ICP, etc., will have to eventually follow, because that is the standard that all the developers in the world, there's 30 million developers in the world, and they're learning Bitcoin and Solidity and Ethereum. They're not going to learn 25 different systems. That's how this works. That's why they all learned Windows, and they all built on Windows. And that's why some of them learned Mac OS, and they all built for Mac OS. And then they had to learn for Android and for iOS. But that's it. There's no more platforms that are going to exist. And ETC is perfectly aligned, and is going to continue aligned in the future, and with all the innovation of the EVM standard. And many scientists, not only in ETC and Ethereum and Cardano, but are always going to be innovating in the EVM standard. And ETC, as an open source project, and the EVM is also an open source project, is going to inherit that and create its own innovations. ETC also has to do its own innovations. For example, migrate to SHA-3, integrate a technology to control the growth of the of the block of each block. So we control bloating, or even fixing the block size. That would be a specific digamos, feature that would be in ETC and maybe in not in no other kind of EVM blockchain.
Means that unless a new innovation funding source comes in from volunteerism, a patron, or a treasury system, there's just simply not going to be the funding necessary to field the tens of millions of dollars required to systematically change ETC so that it can be its own chain. Now,
ETC does not need tens of millions of dollars for this. Again, the ecosystem of the EVM is a very large ecosystem. In its aggregate, it may invest tens of millions of dollars to innovate, but ETC can perfectly get from there. ETC, of course, needs a dedicated developer team or several developer teams, whoever wants to come and work on ETC, proposing ideas and integrating good ideas in ETC, but certainly does not need tens of millions of dollars. A developer team costs between $2 and $3 million a year. That would be a developer team of 10 or 15 developers. And if you want to have 3, as is the theoretical idea of the Treasury, you can go raise that to 9 million, say 3 teams of $3 million each. But to say that you need tens of millions of dollars is false.
We proposed years ago a treasury system, and at the time the politics of ETC were such that they preferred a Bitcoin-style volunteerism approach. After 6 months of fighting, I said, it's an interesting experiment. I have Cardano, we have other things we're working on. So what we're going to do is retire the Mantis project, reassign the developers elsewhere in the company, and let's see where ETC goes. So we left, and we saw 3 years of no progress, no major innovations, no major changes, not a lot of adoption. And it got so bad last year that ETC started becoming the victim of numerous 51% attacks. So we said, all right, we're kind of emotionally connected.
Well, that is false too. ETC, as I said before, is just always kept up with Ethereum. So Ethereum is here, ETC is here, and ETC did all the hard forks that Ethereum did. And when it got attacked, it was completely updated with Ethereum. So it wasn't an innovation problem or a lack of developer problem or a lack of money problem that caused the attacks. What caused the attacks is that there is already okay, 3623. So I was saying that what caused the attacks was not that there was no developers or no money or that the technology was bad, because the technology or innovation, the technology was exactly on parity with Ethereum. What happened is that in the market, you have Bitcoin, Ethereum, which is today a proof of work smart contract platform, and then you have many other chains, no? Bcash, Cardano, DOT, etc. And Ethereum, because Ethereum Classic, because Ethereum is here occupying the space of proof of work. Ethereum Classic cannot go and compete yet with Ethereum 1 because that is the one that has the position of being a smart contract space layer proof of work blockchain. ETC was smaller, and what happened in many chains is that someone went and rented machines from Ethereum miners and decided to steal money from an exchange. And so they got the machines to mining, they got a big hash power. ETC had a low hash power, and they sent money to an exchange. The exchange, they bought Zcash there, and they withdrew the Zcash, and then they used the machines to reorganize ETC and make the original transfer of ETC to the exchange disappear. So they kept the ETC and the Zcash. That's the fundamental way double spends occur, and what they are for. It's to steal money. And so it wasn't because there was no money, no innovation, or anything like that. It was just that there was a bear market at the time. It was in August of 2020. You can go and see the charts. Everything was very low at the time. ETC was low, sufficiently low to just go and rent some machines there and attack ETC. So it has nothing to do with what Charles is saying.
Into the ecosystem. Let's come back and propose some common sense things. First off, let's talk about how to solve the immediate problems of 51% attacks. So we said, let's talk about checkpointing. We produced papers like Advocate and the BFT checkpointing paper. It talked about the science of checkpointing. And we wrote ECIPs, theory of classic improvement proposals. All the while doing that, getting brutally attacked by some people who apparently have already left the ETC ecosystem.
So I don't know who's talking about, who attacked him, who had already left the ecosystem. I don't know if it's me, but yes, I attack every single bad idea that they propose. I attack. Checkpointing is a bad idea because checkpointing is a device that cancels Nakamoto consensus and makes proof of work. It deactivates proof of work or invalidates proof of work, because proof of work, the miners go building blocks one on top of the other, and they send them to the rest of the network, and the network receives them, verifies them, the network of nodes, who are not miners, and once they verify them, they put them at the top of the chain. Checkpointing, to prevent 51% attacks supposedly, is basically another set of nodes that goes recording the history of the network. And when there is an attack, the nodes and the honest miners can check can check the last checkpoint with this other set of nodes and say, okay, we left off here before the attack. Let's continue here, and they continue or reorganize the chain so they continue with the old chain and not the one that was attacked. But that canceled Nakamoto consensus is incredibly insecure, because now you're moving the security from miners and nodes to a third party who are these nodes, and they become the security providers. And they're just a regular set of nodes. It's not that they use proof of work or anything innovative to provide security. It's just a parallel checkpointing system that if you're going to use that, then you throw away the miners and you just turn it into a regular network or proof of stake network, and you use that, which is fine, but it's not secure, and it cancels the real secure model, which is Nakamoto consensus.
Second, we said there needs to be a different roadmap than the roadmap of Ethereum, because they're going to diverge. Ethereum's going to proof of stake. ETC needs to do it.
ETC does not have the roadmap of Ethereum. I'm going to call it false, but he calls me a liar, and I think that he is a liar, because I can see here, and I am demonstrating how he's lying. ETC's roadmap is to continue with proof of work, a fixed monetary policy, full replication at the base layer, smart contracts, and continue being compatible with the higher level EVM standard that everybody's going to be compatible with. Ethereum, even in 6 months or 10 months, are clearly going away from that and are going to go to proof of stake, sharding, and they don't have a fixed monetary policy. The developers just change it whenever they want. So and all the technologies that system, they have a beacon chain, etc. They're going to increase scalability to be a retail kind of application system, and that is exactly what ETC is not going to do. ETC is not Ethereum 2.0 in a way. So you cannot say, oh, you cannot be the same roadmap. When of course the components that are the same for all the chains, which are the EVM standard, of course we're going to continue with that. It's the only way of being in the market, no?
its own thing. It can't stay where it's at. It's an unstable design. We see that every day. Look at your gas fees. Look, do you think that is a competitive platform?
Here he is talking about the gas fees of Ethereum 1, which are very high, and that is exactly what ETC wants to do. ETC wants to be a low volume. It doesn't have capacity of more throughput, but each transaction is going to be higher value. That is exactly what's happening today with Bitcoin. Bitcoin is a network that only produces 200 to 500,000 transactions per day, but every second billions of dollars are moved. So the transactions are getting bigger and bigger and bigger, and the fees per transaction are going higher because the more demand there is for this limited stock of transactions, the higher people have to pay to be able to enter a large transaction. And that is exactly the model. Why is that the model? Because Bitcoin, the rewards per block every 4 years are going down and down and down. And at some point, the fixed rewards, what Charles calls the inflation, which is not inflation, the fixed rewards are paying currently the majority of mining. But in the future, as the rewards go disappearing, the only way to pay for mining and a high mining hash rate is to have these high fees. And that's why it's good to have a limited stock of transactions at the base layer so that people pay more per transaction. Now it's $5. It can be $50 in the future. It could be $100 per transaction in the future. It could be $1,000 per transaction in the future for BTC. In the case of Ethereum Classic, it's exactly the same. The monetary policy is decreasing per block. It was 5, then 4, now it's 3.20, and it's going to be decreasing every 5 million blocks, 20% until it's 0. So ETC is going to depend exclusively on fees, and to keep fees high per transaction, and because ETC anyway is not scalable, then the fees per transaction in ETC that today are negligible are going to go up. So the gas fees that he's mentioning, he says that are ridiculous, are not ridiculous. Actually, they are going to pay for the hash rate of ETC in the future, and actually, Ethereum 1.0, the fees today are more than the mining rewards. So Ethereum 1.0 has proven that Bitcoin is going to be successful only with fees, and has proven that ETC is going to be successful only with fees. So it is false to say that that is bad. It is good. Of course, it is bad for a layer 2 network. If you want to process thousands of transactions per second like Visa or the New York Stock Exchange or Uniswap, etc., you need, of course, very low fees per transaction, nearly 0, and a huge volume. That's great. And in that case, it is right for the layer 2 networks and layer 3 and layer 4 to be practically free in terms of fees, because it's the only way to support this huge volume of transactions where each transaction has a small amount, no? It's a small value. So what Charles just said is exactly the opposite. What he's showing is the future success of ETC.
When even Bitcoin itself at some point will get smart contracting capabilities at a fraction of the cost, and you're going to argue that our principles are stronger than Bitcoin's in that respect?
That is false. Bitcoin will never have smart contracts capability at the base layer. What he's saying is that on the layer 2, there's going to be platforms with smart contracts which already exist, for example, RSK. And Bitcoin integrated the technology for layer 2 systems to have smart contracts, and then they send only a snippet of the results of the computations of the smart contracts to Bitcoin, and Bitcoin can process that transaction and move money at the base layer. But that is not that does not mean that Bitcoin in itself is going to have smart contracts. Smart contracts are going to be on top of Bitcoin, and this is what I'm saying. That is the huge opportunity of ETC. ETC, there's two things that are huge opportunities. One is that Ethereum 1 is going to disappear and it's going to turn into Ethereum 2. And the second opportunity is that Bitcoin will never have smart contracts at the base layer. So ETC is going to grow very rapidly past Dogecoin, past Bitcoin Cash, past Litecoin, past everybody, and it's going to be at least 50% as big as Bitcoin because of power law, or maybe even as big as Bitcoin, or maybe bigger than Bitcoin because it's more versatile and it's a full computer. Precisely because Bitcoin will not have this capability at the base layer. Again, let's understand, I'm talking about the base layer, which is the secure layer, proof of work, fully replicated. The second layers, they're going to have everything. Why? Because they're proof of stake system, they're insecure, they can have more volume, they can have micro payments and all that, and distribute money around the world to millions of people in one transaction and stuff like that, because they are meant to be that. And that's why they had to migrate to proof of stake and sharding and fragmentation, which is basically taking proof of work chains like ETC and Bitcoin in the path of being very similar to the traditional systems like banking, central banking, Visa cards, wire transfer, etc. Those systems are in fact layered, and they have all these intricacies and complexities to be able to increase their throughput. And that's what POS is doing. But the base layer is not doing that. And ETC will be the only one in the world that is proof of work, fixed monetary policy, and smart contracts at the base layer, because it's a state machine. Bitcoin is not a state machine. Bitcoin is a system where I don't remember the name. It's where each transaction is tied to the past one, so it doesn't change the state like ETC. It is a system. For example, if you have one Bitcoin today, basically is the latest transaction of a long chain of transactions since the Coinbase of that block, where one transaction says move it to the other account, the other account, the other account, and so it's a chain. So that system is not a state system, and it doesn't permit smart contracts.
Come on, let's be real about this. If you want to live in a fantasy land with no plan and no strategy, you can try to stay with the status quo, and then you're saying, well, we disagree.
Again, ETC has a plan, has a strategy. In my case, my contribution is I write a lot about the philosophy and the plan and the strategy and the future roadmap. I even publish all the time slides with my business development roadmap that I propose for people to go selling to the world, etc. And the technical roadmap, which is SHA-3, fly client, control bloat, control the gas limit per block, etc.
Agree with Vitalik, but we agree with Vitalik. The design of Ethereum was perfect in the beginning, but the vision of the founder was wrong. It's crazy.
No, that's not what ETC is saying. What ETC is saying is, and we've gone making hard forks all the time, is that we're going to keep and be compatible with EVM, with a higher EVM standard, which is higher than Ethereum. It's a general standard that is going to be public, and it's going to be open source, and everybody's going to be able to copy whatever innovation happens there, including ETC. And ETC is going to do its own innovations to be as efficient as possible in its own niche. For example, integrate SHA-3, that nobody else has it. This is something that was developed only within ETC, so that the fact that there is no innovation is absolutely false. There's even something called the SHA-3 Coalition that has been working since 2019 to integrate SHA-3. It's completely new. Nobody uses SHA-3. It's not that it's an incredible innovation, but it required integrating an algorithm that doesn't exist in any proof of work chain into ETC, and integrating that into the nodes, and creating test nets and getting people to test it, etc. And it's already ready, and it's already even proposed for Core Geth to integrate it, and Mantis I think is going to integrate it, and Hyperledger Base is going to integrate it, and that's unique for ETC, so that there's no innovation is false.
Inconsistencies. You need to really take a step back and say things have to change, and you need an innovation budget to pay for that change. Anything can be done. The
innovation budget is, that's why I said before, pay attention that he invested money. The innovation budget is that people who come and they burn and invest their own money to propose innovations to ETC. ETC is not designed to go and pay money to developers and node operators and marketing people. No. All the money of the monetary policy has to go to block producers, who are the miners, so that more hash power comes to ETC and it becomes even more secure. Um, this concept that there has to be an innovation budget, which what he's mentioning is the Treasury, is false. Bitcoin is the most successful blockchain in the world, and there's like 20 or 30 developers and computer scientists working there. Many people write papers from universities proposing changes to Bitcoin, and it doesn't have a central innovation budget. The developers are supported by MIT, by Square, and other people who want to support the developers, and many developers work by themselves because they want to, and they have their own, each one that puts money on development or their hours on development in Bitcoin and in ETC either does it because they have some token, some cryptocurrency, some coins, and they want those to go up, and that's how they're going to make money. So it's a secondary benefit. No, it's not a direct benefit of developing, but it's a secondary benefit because the coins go up. This is important. The other benefit is that you get a lot of prestige. For example, MIT is getting a lot of prestige as a premier technical university in the world for supporting Bitcoin, which is a world-changing technology. And I'm sure they are supporting Ethereum as well. So we are going to receive all that innovation as well. But and Square is doing it because Square wants to support it so that they import the technology into their business, and then they're going to make money as they do with a Cash App, charging fees or whatever. That's how they make money. It's a secondary revenue source. Square is burning money by supporting development in Bitcoin, but is getting revenues by using that technology for something else. That happens with Android, that happens with Red Hat and Linux, etc. So this thing that there has to be an innovation he's introducing here, that there has to be an innovation, is false. The way it works is that whoever wants to invest because they see that they have some revenue model in the future, secondary, tertiary revenue model in the future, they can come and they can invest as long as they have good ideas as well, because if not, the ideas are going to be rejected. So that's also important. When you invest your own money, you're going to invest it in the most efficient way possible. And that means that you're going to propose changes that are going to be accepted. If not, you're just burning your money and you're not helping the network.
You can invent new network algorithms. You can make useful proof of work. You can shard proof of work. You can really get deep in the formal verification of smart contracts. We can make an explicit doctrine and find the Thomas Aquinas of the Church of Illegality.
No, the philosophy already exists, so stop repeating that. I'm talking to a video. But he just mentioned sharding proof of work. Facepalm. Okay, again, the base layer has to be fully replicated everywhere. And the miner base, the computing base that is creating blocks, has to be as big as possible so that nobody can attack it again. Okay, do you get that? So that means that if you shard the miner base and you divide it so that they can make more blocks, because you divide, say, the miners into 10 group of mining and each one mines a different block, of course you're going to increase the frequency of blocks and maybe even increase throughput. But first, throughput, we don't need to increase throughput, because if you increase throughput, then the revenues per transaction are going to go down. Two, if you shard mining, each unit that is sharded is prone to be attacked. And you are dissolving the mounting of hash power that has to be unified, working on a single block every 15 seconds, and you're just dividing it and making it more vulnerable. So proof of work sharding, or whatever that idea is as crazy as sharding for proof of work, and as crazy as proof of stake for Zcash or Bitcoin or ETC.
And write that doctrine down. All these things can be done, but it takes time a team, and the team can't work for free because of the complexity of the project. Volunteerism doesn't work well
When he's introducing the fallacy that developers deserve to be paid. And he said a team cannot work for free. Nobody's saying that. What we are saying is the source of payment cannot be the monetary policy of ETC or the mining reward of ETC. The source cannot be the network itself. The source has to be people like him that he sunk $2.5 million in Mantis, and now he's sinking more millions of dollars because he wants to. It's the risk that he wants to run, and if he burns his money and he doesn't get any revenue in the future, well, that's the risk. That's business risk. That is capitalism. This thing of saying a developer team must be paid, which means must be paid by a treasury, is totally false. The money it's absolutely the opposite. The money of ETC, the money that the rewards that is created per block has to go to mining. That's the only model that is the most secure. Diverting money to other sources is absolutely flawed thinking, fiat thinking. A person that doesn't understand about blockchain, a person that doesn't understand about proof of work, and what's the security model. That's why he created Cardano, evidently.
A project is hyper complicated. Just imagine that you're building a skyscraper and you say, well, we'll just do it as an open source volunteer skyscraper, and then everybody's just going to show up and do their work. Would you trust that building? You'll have variable quality.
No, because skyscrapers are not built as open source projects. But on the other hand, software is indeed built as open source projects. In fact, in the future, all software is going to be open source projects. For example, I do trust Bitcoin, and that's an open source voluntaristic or volunteerism project. I trust Android. 70% of the phones in the world trust Android, which is an open source project. Many, like 90% of enterprise servers run on Linux, and Linux is an open source project. So it is false that ETC, would you trust a building that is built open source with developers that are not paid? No, that's not true. Yes, in open source it is trusted, and not only that, it is so trusted, that model, that everything is migrating, and will eventually 100% of software is going to migrate to open source, and 100% of those softwares, the things are not paid by the protocols, like in Bitcoin. Things are paid by the companies or individuals or developers who want to donate their hours or give their hours because they have some other way of making money.
Throughout it, and it'll never get completed. The more complicated a project, the more specialized the team has to be working on it, and those teams require resources. Volunteerism didn't work for years. The definition of insanity is doing the same thing again and again and expecting different results.
In ETC, what he calls voluntarism as a way of belittling it. It's not voluntarism, it's capitalism and free market. Since 2016, it did work. And again, he's contradicting himself because he put money and he's saying that it didn't work. The Mantis team, he's burning money today in the Mantis team, and he's saying that doesn't work when he's the one volunteering his money. So evidently he has this thing of creating fallacies, and then he falls for his own trap in his own fallacy. He is a person that is an example of a person who invested money with the expectation of revenue in the future. Not only is he expecting revenue from whatever product he's creating, and because of the knowledge that his company is acquiring in participating in these projects, but he's also going to, as he's going to say later in the video, he owns ETC. So that's another way that he's going to, in which he's going to earn money in the future. So he has many ways of making money without having to suck money from a treasury from ETC. So the conclusion in this point is ETC has worked very successfully until today. Charles has invested money because he expects some revenue somehow, which will not be from the Treasury. Barry Silbert has invested millions of dollars because he owns 8, 10, I don't know how many millions of ETC. So he understands perfectly well that if he keeps it alive and it thrives, he's going to make, like today, I mean, when ETC hits $100, Barry's going to have around $1 billion in ETC. So that's the way he makes money. The $2 million that he invested are in ETC in development are nothing. Then ETC Labs has invested millions of dollars in ETC since they started in 2018. And then Igor Artamanov, the ETC dev team here, where I worked, that doesn't exist anymore, for a couple of years, I think since 2016, from 2016 to 2018, was supported by an ETC owner as well. So saying that what hasn't worked in the past is false, because nothing has not worked. It has worked. Not only that he's one of those dudes who invested his own money expecting earnings in the future.
So that's probably not going to get us there. The Patreon model means that ETC is owned and operated by one or a few entities, the rich people. And believe it or not, if I wanted to control ETC, I'm in a financial position where I could be that guy. So, oh, sure.
Well, this is false. He is one of those guys. He is doing it right now because he's a billionaire. He invested money in the past in Mantis, and he's investing money now in Mantis. Why? Because he owns ETC, like he's going to say, and because he's expecting to acquire this knowledge and experience for IOHK, which can be reused for many businesses in enterprise and selling services to government and enterprise and all that. And because he has his vision that Mantis is going to have revenue some other way in the future. I don't know, charging exchanges. I don't know what other model he may, but that the open source model where different parties, no matter if they are billionaires or not, they have to be rich people, because rich people are the only ones that have excess money to invest, or corporations or government, come and donate to the developer teams, and that is centralizing is false. That is exactly the decentralizing format in Bitcoin and in ETC, and it has survived, and ETC is thriving today as we speak, and Bitcoin even more is the leading blockchain in the world. Why is that false? Because development is only one in these open source and really truly decentralized systems, is only one part of the whole ecosystem. You have development, and then you have mining, which has a whole different business model, and they are the ones that have to receive 100% of the rewards. And then you have node operators, for example, Coinbase, Binance, OKX, blockchain.com, all the wallets like Exodus, and I can't remember all the brands, but all the wallet brands, etc. Even the banks are already being node operators to be able to participate in the blockchains. All of those node operators, they have their own other business models. So you have the developers are just one section. The miners, the node operators, that's already a division of power and a decentralization at the technical level. But on top of that, you have Barry Silbert, me, Charles, and many investors who own ETC, and many small investors all around the world, and all those also have a say. And not only that, layer 2 systems are going to say, also have power in what happens in ETC, because they are going to have interest in ETC, because they're going to be anchoring and having settlements in ETC. So they're going to have a say. Layer 2 systems, dApps are going to have a say. For example, I was talking to a billionaire who works very intensely in Ethereum, and he told me the reason why Ethereum 1 is going to disappear and everything is going to move to Ethereum 2 is because the group that has a lot of say today is not the developers, not Vitalik and the developers. It's not the foundation, because they have billions of dollars. It's not the miners, because they're going to be digamos, discarded. And it's not the base network node operators, it's the DeFi projects. The DeFi projects today, at this state of growth of Ethereum, have so many users and so much volume that whatever they decide is where the whole ecosystem is going to go. So as you can see, there's many parts in an ecosystem. So that he says that ETC, if it stays like this, is going to be owned by 2 billionaires is false.
Pay for everything, and we'll just move it in this particular direction. But that is not good for decentralization. It hurts the entire ecosystem.
False. The current system is good for decentralization, as I explained. The Treasury is centralizing.
By having one or two rich guys basically pay for everything.
The Treasury would be one rich guy, which is the Treasury, and whoever controls it is going to be the one paying for everything and deciding everything in ETC. Not only that, because everybody's going to know who this guy is or a group of guys are, governments are going to go to them saying, okay, now you have to do what I tell you. And it's going to ruin everything.
And decide where everything is going to go. So I've always argued that the third option, a treasury system, makes sense. And there's been so many lies told about this and so many misconceptions about basic economics. Let's be very clear about something. When a blockchain mints money through inflation, that money doesn't belong automatically to one group of people, like miners.
Oh my God.
That is a money made to pay for a service being provided to the blockchain. The killer application of that was mining.
Well, this is all absolutely false. I mean, it's false because, okay, when you go to the Bitcoin white paper, and when you go and see the Bitcoin design, and when you go and see the Ethereum white paper and the Ethereum yellow paper, and you see their design, you're going to see, and when you go even previous to Bitcoin, you go to BitGold, for example, which is the pioneer or the system on which Bitcoin was inspired, you're going to see that the whole point of mining and solving the puzzle, the computational puzzle of proof of work, is to expend the most amount of energy to create what is called BitGold. Each block hash is what is called Bitcoin. It's like an NFT. And that block hash is the one that has to be built with the most amount of work possible, and it's done only by miners. Miners are the only ones who produce that hash. When they produce that hash, then the network pays them in the tokens, in 6.25 Bitcoins, for example, or 3.2 ETC, as a reward for creating that BitGold, that block hash. And that is what makes, that is Nakamoto consensus, that's it. Then the nodes verify it, and when they verify it, they send the money to the miner, and that's it. That's the only design. There's no other purpose for that money. If you divert that money, then less money goes to the miner, so the miner is not going to be incentivized, or it's going to be incentivized less to put more machines, and it's going to put less machines and spend less power in building that block. This means that 100% of the money is only destined for miners. Not because I say it and the explanation that I just gave, but because you go and see all the literature, and there's zero literature that says that money has to go to nodes, or to development, or to academia, or to IOHK or Charles Hoskinson. There's nothing that says that. He just made that up.
That's what Bitcoin does. But every person in ETC.
Exactly, that's what Bitcoin does. And Bitcoin is the original invention, is the blockchain, is the one that created the whole space. Exactly, thank you.
He pays that price. Inflation. And right now, the idea is...
Okay, here I'm going to clarify this thing. This is false. Bitcoin has a stock of 21 million Bitcoins. That's the stock. There's no inflation. So that's it. What happens is that how do you distribute this stock of 21 million Bitcoins? There's no other Bitcoins that are going to exist other than 21 million Bitcoins. Satoshi Nakamoto said, okay, the only way of distributing this fairly is by paying them to the guys who burn their machines and electricity to create the blocks, to secure the blockchain, to make it economically viable, because sound money has to go through a lot of cost of creating. If not, central banking creates money at no cost, and we can see the inflation that is being created and the mess that is being done in central banking in the world. So he said the way of doing this, okay, we create this stock of 21 million and we give it 50 coins per block to each miner. And then we lower it 20 to 25 because that's how the supply can be regulated, so that it's not a lot of supply per year. So you have a lot of supply at the beginning, and then the supply goes down, and then goes down, and then goes down. And then you can say that there is, yes, a stock of the coins that were not yet distributed, and a stock that were distributed. And the point of lowering the distribution rate is to create a situation where the stock to the new issuance becomes bigger. Because if you have 50 coins per year all the time, you have a lot of new coins coming in every year, and that floods the market of new coins, and it's a lot of supply, and the price would stay low. And if it stays low, then hash rate doesn't go up. So the concept of stepping it downwards is for the current stock that is already distributed to go growing as compared to the new supply. Some people call that new supply inflation. Technically, it's not inflation. In the case of ETC, it is 210 million instead of 21 million. That's the stock that is going to exist in the history of humanity for ETC. And ETC now is also lowering the payment per block, and so the stock to flow ratio is increasing every year. And the higher the stock to flow ratio is, the more the coin is going to go up, because every year the new supply is going to get smaller. But I wanted to clarify that.
That money is automatically owned by the miners. This is the first lie that's being told in an anti-treasury campaign again and again and again. It is money that belongs to the people of ETC.
No, it doesn't belong to the people of ETC. The way it works is that this flow that is being activated in every block, because new coins are minted or new coins are distributed to the miners get it, and they have at least 90% of those coins. They have to use it to invest in machines and to pay for the electricity and to the employees, the data center, and all that. And that introduces the money into the economy in what some people say a fair way. I don't know if it's fair or not fair, but at least it's more or less like gold works. Gold, there is also a specific stock of gold in the world, and miners have to expend a lot of energy and capital to extract gold from nature. And now the stock of gold is huge. At the beginning, 7,000 years ago, a lot of gold was coming into the market, but now the stock of gold that exists in the hands of people is like 60 times the amount of gold that is extracted from nature every year. And those miners have to spend a lot of money, and when they extract the gold, they have to sell a large part of that gold to pay for salaries and their machines and buy new machines, which is called capex, and to pay for fuel and all the whatever the process is. So that is what Bitcoin and ETC imitate. So you cannot talk about inflation. Inflation is when you have a fiat currency, for example, and you have a stock of money like was less than $1 trillion in 2009, and today, for no reason, it was created, it was printed, and we have like $7 or $8 trillion of new printed money. And not only that, there is absolute uncertainty of what is the total amount of money that is going to ever exist in dollars or euros or yen or renminbi or Argentine pesos or Venezuela. Why? Because it is trivial to create, and there's no notion of what is the total stock. So Nobody knows what is the total stock of dollars in the world, and it could be double next year and triple the other year, and it's absolutely arbitrary.
Because they
Sorry, and in Bitcoin and ETC, there's actually deflation because as the prices of these tokens go up because of this limited stock concept, things are worth less as compared to Bitcoin and are worth less as compared to ETC. Fiat system have inflation because things are worth more as compared to the coins, to the dollars or fiat currencies.
pay for it through inflation. The ETC I hold, the ETC other people hold, is worth a little less because more is entered circulation.
No, his ETC, you see, he just said that he owns ETC, so that is one of his business models. But the ETC that he holds or I hold have the same. One ETC is one ETC, and it's only a little piece of 210 million ETC, and that's the whole. There's no inflation. There's only a fixed stock. The fact that it hasn't been issued yet, it's just a design to make it valuable and all the things that I said before.
And then there's a question of allocation. What are we paying for, and what are we getting?
Well, the question of allocation, what he mentioned is, where does the money go? Once an ETC reward is issued per block, where does it go? Well, we all know, anybody that has common sense knows that it only goes to miners because that's the whole concept, and all the technical specification and philosophical design of the system is for it to go to miners. What he's saying of the allocation problem, that has to be decided by capitalism, by markets, not a treasury with a few dudes voting. Voting is the worst thing that you can do for technical innovation. Technical innovation has to be done by people who know, and when they know and they create something, they propose it to the community, and the community decides whether it's good for them, because the community that decides, miners, token owners, node operators, they have their own stake, and it's highly likely that they're always going to choose the best innovation, the best change. Having a treasury basically puts a lot of money in a place, gives it to someone, and that someone is going to do whatever they want, or the ones who vote on the treasury.
There's been numerous 51% attacks. So the mining...
Again, the 51% attacks are not because there was no money, no innovation, and no development.
Class in ETC has from time to time shown mercenary behavior.
Mercenary behavior by the miners is good. The miners have to go like a mercenary wherever they are paid the highest. This is why we cannot put a tax, because they're going to go somewhere else. Given the same price, market price, if you pay X, they're going to earn that. If you pay X minus a tax, they're going to earn less. That's the correct way of comparing it. And it's good for miners to be mercenaries. And it's good even for attackers to try to attack the network, because it makes the network more resilient. Precisely, Bitcoin, ETC is going up now, and it went from number 70 to number 18 or 19, and it's going to continue to go up, and it's going to be number 2 at the base layer after Bitcoin, because of the attacks. Because the attacks, people think that the attacks, oh, those are bad, and it's going to go down. I thought that too. Elaine O thought that too. I think that even Satoshi Nakamoto thought that too. But as we have seen, the attacks have made ETC stronger, because the 2019 attack in the end didn't affect the price, and we were all concerned, and it started the SHA-3 movement. In 2020, it started this new movement, which was to create the treasury, which is a bad idea, but also force the community to integrate, and the developers of ETC Labs to integrate MES, and then to change the mining algorithm, which in my opinion is the real solution, to ETC hash. The real solution for me is to change it from ETC hash to SHA-3, but I spoke about that in other videos. But again, all these things, all these changes, whether I think it's a bad idea, a good idea, or not, in the end stabilized ETC, and now ETC is thriving, and it is highly likely that ETC is not going to be attacked again. Blockchains are the perfect example of anti-fragile systems. The more you attack them, the stronger they become. And you have seen that in Bitcoin as well. Bitcoin has not suffered, although there were many attempts, but they always failed. But it has had a lot of social attacks, and the social attacks have affirmed the philosophy and have affirmed the conviction of the network participants. And this is why Bitcoin is becoming more and more stronger, and you see corporations even being like activists for Bitcoin and hoarding Bitcoin and making the price go up.
So not exactly the best people in the world to always pay blindly. Second, all the other facilities of ETC are uncompensated and living in the volunteerism. That's why
when he says all the other facilities, I think he says miners are being paid by the network, but the node operators are not being paid by the network. The developers are not being paid by the network. They're being paid, but not by the network. The marketing people and the bloggers like me and the people on social media promoting ETC are not being paid by the network. dApp developers are not being paid by the network, and that is fine. That's another topic. dApp developers, they are startups. They have to put their own money, get it from investors, or create a protocol and create a token and make money through that token. That's how all DeFi is doing it. None of the DeFi businesses, the ones that were without any token, now they're all putting tokens, but because that's the like a uni token, it's the model that they discovered that would pay for their development and incentivizes them because they want to be rich as well, and to maintain the protocol going forward. They're not getting money from the chain. Maybe they got money from the foundation that was the pre-mine, which is a totally different concept. But there's no, in Ethereum, there's no treasury. Their money goes there and they're paying for Uniswap to be created, and they're paying for Yearn Finance, and they're paying for the other dApp and the other one, and for lending and for all the other ideas. It's not being paid by a treasury.
We don't see significant dApp adoption. That's why we don't see a lot of development progress on the infrastructure side. That's why we don't see a lot of marketing. That's why we see an overwhelmingly negative brand perception.
Okay, but there is development. Why we don't see dApp development in ETC is because the market is discovering the value of ETC. Nobody understood why ETC is identical to Ethereum 1 and what was its purpose. But me and others have described the purpose, which is when Ethereum 1 goes to layer 2, then ETC is going to occupy that. And because Bitcoin is not going to have smart contracts, then ETC is going to be the complementary system at the base layer with Bitcoin. That's the long game, and that's why now the market is rediscovering Ethereum Classic, and that's why Ethereum Classic is going up. So ETC has a purpose, and it has a position in the market, and the network didn't pay for anything for anybody to think these things or to think the strategy or anything like that. The reason why ETC has bad reputation is because the Ethereum people who took all the money said that ETC was for criminals because we didn't reorganize the money of the DAO hacker, and marketing is being done because I voluntarily write on Etherplan. Nearly 200,000 people have visited Etherplan since 2019. This year alone, there were like 100,000 people who visited Etherplan, and they read all my articles, and they read from my price predictions to the fundamental parts like the security model, the ungovernance model, the monetary policy, the differences between F2 and F1 and ETC. And why L2 is going to connect to L1 and ETC is going to have value, and why it's going to be $6 trillion in the future, and all that. That is marketing, and I do it voluntarily. I don't want a treasury to pay me. I have my own business model. I have my own investment in ETC. I have my own prospects for the future and my own passion for ETC, and this is why I do it. I don't deserve to be paid. And node operators are Coinbase, Binance, and all those exchanges and many others, and the banks are going to be node operators, and corporations are going to be node operators have their own utility. Coinbase being a node operator of Bitcoin and ETC and Ethereum and many chains, and Binance also, they're node operators. They made billions of dollars. They have another business model. They're not getting the money from Bitcoin or from the networks. They are charging clients for their fees or whatever business services they provide. So it is absolutely false this, only the miners are hoarding all the money. Poor the developers. Nobody's paying them. False. He's paying them. ETC Labs is paying them. MIT is paying the developers of Bitcoin. Square is paying, and future billionaires and future companies are going to come to ETC. It's a hypothetical, I know, but I am sure they're going to come and continue paying for development because they want to reap the benefits, just like those guys are reaping the benefits from BTC. Oh, node operators are not being paid. Poor guys. Coinbase is worth $100 billion, and Binance is bigger than Coinbase. It's worth more than $100 billion. And the other exchanges, OKX, etc., now Binance is being investigated, so maybe the regulators cancel it. But whoever replaces Binance is going to be worth more than $100 billion. Square is worth billions of dollars because of Bitcoin, because they have a Cash App, etc.
Of ETC, a lot of people in the space say it's a dead chain and it has no future, no traction. The argument of a treasury is take some of that inflation and put it into a decentralized account to pay for the things other than just security. Things about commercialization, things about innovation, things about...
ETC is not a dead chain, and you cannot redirect inflation. There's no inflation. There's a fixed stock. What you want is to get some of that stock for the treasury. And no, that has to be to the miners, and the miners introduce it to the rest of the economy of the world through their operation.
Engineering, things about growth of the chain. This works incredibly well with Cardano. And
ETC is not a dead chain and doesn't need to finance growth through a miner tax because ETC is growing. In what planet are you, man? It has 400 nodes. It has one of the highest volumes in trading volume in the world. Millions of people own it. It went from 4 to 60. I don't understand.
Has enabled Cardano to grow tremendously quickly. Catalyst started very small. It's still in its infancy. And now every 6 to 8 weeks, we see 50 or more companies, ventures, projects, people funded. There's $600 million of value that's there. And when people consider Cardano as a chain to invest in, build in.
And who decides in that thing to give the money and to whom? Who evaluates the projects? And who decides to which projects to give the money? Once the money is given, who controls and supervises that they actually delivered on what they promised they were going to do?
Do things in. They take into account that chain has made provisions to pay for its evolution, its growth, and the community is in charge of that. So the idea of
in a treasury, the community is not in charge. Only the big holders and the developers are in charge.
Treasury is you have to start before you run. And Zcash and others pioneered this model.
Exactly. Zcash is a perfect example. Zcash started as a cypherpunk project of privacy, and they had the bad idea of creating a treasury, and they had it limited in time, and it expired in 2020. And because the developers that's their bread every year, and they were made millionaires by getting that money, and they captured all control through the treasury. They of course they renew it. It's a total fiat system. A treasury is a fiat system, and it creates the interest of a fiat system. Not only that, but Zcash is the worst example that Charles can give, because Zcash just in the last 2 weeks proposed that developer team that has 100% share of the treasury and 100% share of nodes in the and it's the only voice in Zcash. It's called Electric Coin Company, and it's led by Zuko. Basically, proposed proof of stake in Zcash. So it's the worst example that you can give.
Ensure that there are some core infrastructure companies, because there was no ICO with ETC, and enable those core infrastructure companies to be able to come up with a vision, a roadmap in sustainable, stable infrastructure that is distinctly different from ETH2, Ethereum 2, and allows us to preserve the principles that ETC was founded on.
Well, that's false, because once you create the treasury, the principles of Cody's law and immutability and trust minimization are gone. So that's false. But also you can see here that Charles has like a corporate kind of mentality, a typical fiat mentality, a proof of stake mentality, which is that yes, we have to have formal philosophy. Somebody has to write it. We need to have a treasury with $1 billion there, or billions of dollars there, so people can see that we have a long-term plan, and we need to have 3 core developer teams. It's all structured. It's all personal design in his head. No, it doesn't work like that. Proof of open source proof of work blockchains are just organic systems, global systems, and they go growing and going up and down with capitalism and the market. And the market decides whether people donate and they start building things, and if people want to, you don't have a central treasury that says, okay, we're going to have not 1, not 2, but I decide 3 developer teams. That is also false, because even if you have 3 developer teams, one always grows to be the big one. So but that's another thing. And not only that, we're going to allocate this budget to marketing. What, are you the CEO of a corporation or something? Not only that, but we're going to allocate this other budget to infrastructure. Not only that, but we're going to allocate this other budget for X. For why? Why? Because I have a central plan here, and my strategic plan says that. That is corporate thinking.
Formalize those principles. Get them written down. Get a great roadmap for the next 3 to 5 years. Talk about...
ETC has a roadmap and already has principles. If Charles doesn't know the principles of ETC, that is analogous to when 2 weeks or 3 weeks ago he said, I don't know what Bitcoin is for. Well, Charles, you know what? Millions of people know what Bitcoin is for, and millions of people know the philosophy and know what ETC is for.
Where we can innovate. And we've discussed this innovation before. Things like sharded proof of work. There's a great protocol, Pramod Viswanathan.
Sharded proof of work. Oh my God.
Wrote in 2018 called Prism. That protocol is 10,000 times faster than normal proof of work, but preserves the principles of Nakamoto proof of work at its core. There's been 12 years of thought since the launch of Bitcoin about how to improve proof of work. Keep the things you like, but make it faster, better, cheaper, more throughput.
There, more throughput. He fucked it up there, saying that. Nakamoto consensus is not about sharding proof of work. Proof of work has to be one huge, colossal computer base around the world, all working on the same single block. You cannot shard it, just as you cannot shard the blockchain, the database. If you shard the database, you reduce security. You don't increase security. If you shard proof of work, you reduce security. You don't not increase security. Not only that, and there he fucked it up at the end when he said increase throughput. That's where he contradicts himself. If ETC is going to be a Cody's law chain, and if ETC is going to be the base layer proof of work chain fully replicated, it cannot increase throughput. It's a physical reality, an unavoidable physical reality, that throughput cannot be increased with proof of work or Nakamoto consensus, which demands full replication globally in 100% of the nodes. We already know papers have been written. Blocks cannot be more than 12 or 13 seconds. Blocks cannot be more than a certain size. Therefore, more than a certain amount of transactions don't fit above that per block. Therefore, it's not scalable. Get this into your mind. Proof of work is not scalable. So if you're doing what Vitalik did, what you did, what Gavin Wood did with Polkadot, what Dan Larimer did with EOS. Oh, let's increase throughput. Haha, we're going to win against Bitcoin, or we're going to win against Ethereum. You're wrong, because you're all doing that. And ETC, the last thing that it wants is to go in the same direction, increasing throughput and reducing security to try to compete with your Cardano or DOT or Ethereum 2. We don't want to do that. We want to be together with Bitcoin, that is alone there, unscalable, but to be just like Bitcoin, but programmable.
That's just one of dozens of innovation examples. And if there was a treasury system, the infrastructure companies can start constructing all those things.
Innovation is not the point of blockchains. The point of the higher purpose and existence of blockchains is to preserve the accounts, the balances, smart contracts, agreements, dApps, everything that is inside the blockchain has to be sacred. This is why we call it code is law, appealing to law, but we could call it sacred, appealing to religion. But it has to be immutable so that it's credible and so that nobody can tamper with it and so that it's scalable to the whole world. Scalable meaning so that anybody can use it and that everybody in the world, regardless of their race, religion, nationality, culture, or whatever, even if they are in a communist country, they can trust ETC and Bitcoin that their money there and their wealth and their agreements and their smart contracts will always be preserved. It's the only way of doing it is by not creating a treasury, preserving this model of decentralization, and preserving full replication with proof of work.
Then layering on top of that a mechanism for dApps and third parties who agree with the philosophy of ETC. This code is law, the irreversibility of transactions, where there are very few vendors in the space where that is the
irreversibility of transaction. Code is law is not a mental thing. It's not something that I decide and that's it. It's not code is law is not a social thing. Code is law is a technical thing because there's so much hash power in ETC or BTC, and because there are so many nodes in the world. I'm talking about the hypothetical future ETC, and because nobody controls it, that's why code is law. Not because through a treasury you decided by philosophy writing it like Aquinas. No. The code is law is preserved and it's going to be independent of Charles or me or anybody else. Code is law is going to be because the chain is going to be impossible to change. And for us to reach that point, which I think Bitcoin already reached, but ETC didn't yet, we need to preserve the current model with no treasury, no checkpointing. Even we need to get rid of mess that is protecting the network now. And we have to migrate to SHA-3 instead of TC hash. If we do all these things, then the network is going to grow in all directions, from price of the coin to nodes to hash rate to users to dApps, etc., to a point where code is law is going to become a physical reality. It's not going to be a mental thing of the community.
As on nature of the chain's existence, give them an opportunity to finance their applications. So that means you have a robust, resilient ecosystem growing, and as that ecosystem gets utility.
No, that thing of a treasury not only financing 3 developer teams, which is a fallacy, but also financing marketing, but also financing dApps and all that, that is even more centralization. Is a single core. It's going to be ETC Corporation, managed by Charles and Barry.
And adoption, the perceptions of the ecosystem change within the space. And even if it stays a small...
Perception is already changing. This is why, Charles, the price has gone from 4 to 60. How can I explain this? I don't know what's going on. It's like he doesn't see reality.
Ecosystem, it's one that has a right to exist.
Not only that, but the ETC army, before we were like 5 or 10 dudes, and now we're hundreds. The ecosystem is growing.
And maybe it grows. That's the fun part about crypto. But one thing that's blatantly clear to me is you can't just stay static. It has no reason to exist right now. There is no innovation budget anymore. It's going away.
The innovation budget, again, is people who are going to come or who are already here just like him. So he's basically trying to tell us that he doesn't exist. Like Charles Hoskinson is not investing money in ETC. But he is putting money, so he's one of those. Not only that, ETC Labs is putting money. Not only that, Barry Silbert is putting money. And if they go away, others are going to come because ETC is so unique and so valuable that the niche of developing the node and maintaining the node is always going to be occupied. And not only that, these guys are not going to leave precisely because ETC is so valuable. The key is for them not to start extracting money from the treasury. Okay, I'm gonna stop doing it from his video, but I'm gonna just say my final comments. I mean, the rest of his video is all repetition and repetition of the same stuff that he said, and he contradicts himself because at the end he said something very funny, because at one point he says, is ETC going to die? No, it's not going to die. So he wanted to be a little bit soft there. But then at the end he says, and no adoption means a slow death of ETC until it becomes a calcified, lumbering, dead god floating in the astral plane over the next 5 to 10 years. So in the end he says, he transmits all his hate for ETC, and he repeats his constant fear that if the treasury is not created and he's not the savior, then ETC somehow is going to float and die in this astral plane. The other things that he said, just as a final comment, I would do the rest. It's